if you only aim for that big ass move, you will get just slapped in your face all the time, guys. What's going on? What's going on? What's going on, traders? I hope you all having a great time. It's Rafael back again. And damn, I've recorded like 4 or 5 videos talking about my trades, and I wanted to cut them all together. But then I noticed that my microphone was not working. So I had like, I don't know, maybe 3 hours of recording my trading session, all that stuff to share with you, but unfortunately I was acting like a fucking beginner and I didn't have my microphone ready. Fuck it. But anyways, guys, let's talk about today's trading day. I want to go over a few trades with you. The last couple of days when I was not trading, I was not active in the group, I was putting my head more into that institutional order flow stuff and market maker movements and all that stuff. So yeah, I'm going to focus on that art of trading, I would say, the institutional side of trading with order blocks and stuff like that. The things that Stefan is using as well, and yeah, just to work on my accuracy, just to work on my entries with tighter stops, bigger risk reward ratios. I just want to get on the next level as a trader. I mean, my trade management with the loading it up stuff and all that type of things that you've learned from me in the past works great. It's profitable and all good, but some of my students, they are literally just smashing the markets like crazy. Stefan, for example, he's nearly doubling his account every month, and he has a crazy accuracy on a 1 minute time frame, 5 minute time frame, and the way he's trading the market is crazy, guys, and it really blew my mind. So I really put my head into that type of trading and trying to understand how it has to be done, you know, how to become better, more accurate, and even better trade management and all that good stuff, you know, bigger risk reward ratios and all that stuff. That's what I'm trying to do. So let's talk about my overall bias for today. Well, I mean, you can see the market already did all the movement for the day. We had a push to the upside. So let's start at the weekly time frame. So as you can see, the market is moving up strong. We have an order block that already got touched one time. An order block is the last, like if you have a strong down move, the order block is the last up candle, you know. We can redefine it. I mean, this is not the weekly. I think I took a few days in consideration for that order block. Yeah, I was taking this last move up before it dropped, so this is the kind of the target that I was marking up. And yeah, for me, in my eyes, overall, like, we are looking at the bigger picture right now. So for me, overall, it looks like the market is trying to achieve higher highs. Okay, I think we are not ready yet. I mean, we had that drop, but it didn't smash through this one over here. So it looked like it was kind of a retrace, and it is now trying to fight its way back up to maybe smash through this one, because as you can see, market was consolidating here, grabbed liquidity, came up again, came back into that order block over here, and then moving up. So it could be the beginning of a bigger overall up move. This is what I'm thinking from the bigger picture, okay, from the bigger picture perspective. If we check the daily time frame, we see that we are moving in a little downward structure right now, but it's still looking like this major low of this structure was definitely not broken yet, and it looks like they are just loading up liquidity, sell side liquidity, to get that next move to the upside. So my overall buys were up, okay. So what I did today, let's check the 1 hour chart. So what I marked up here is a significant low where price was bouncing strong. Significant low is what I've marked up. We already grabbed the liquidity below that low. We've put a lot of sellers into the market. Let me delete this for a second. I'm going to explain what that is in a second. But anyways, yeah, this low was recently broken, and what I was expecting to see today was, because we have so many lows, like look how many wicks we have in this area, and I know there are so many sell stops, so many sellers are sitting in here. Like if you're a buyer and you put your stop somewhere in this area, then if the stop gets triggered and you are a buyer, you automatically become a seller. So if they push the price over here in this area, then they have a lot of selling liquidity to pull their big buy positions into the market. Because the market maker, you need to understand one thing: the market maker always needs to manipulate the market in a certain direction to create enough liquidity to then buy. So if they want to buy, they first have to create enough sell liquidity, because they have big position size and they cannot just put it into the market, because otherwise the market would just skyrocket. That's why they always have to manipulate, accumulate, or however you want to call it. They have to play this manipulation game to make sure they get enough liquidity to get their positions into the market. So whenever they are about to turn the market around, we can see that on the chart, guys. And if you understand that concept of liquidity, because liquidity is what moves the market makers, they're always searching for business. They want to get their orders into the market. They want to move the market, and they have to manipulate the market a little bit to get enough liquidity so they can place their orders into the market. And yeah, let's look at this one over here, for example. This low got violated, and then they pushed it a little bit more to the downside, and then it was skyrocketing. Boom. I mean, they pulled enough sellers into the market so they can finally bring it up. Or what we had over here, they put buys into the market, broke the structure, tricked sellers into the market, stopped them out, put buyers into the market, stopped them out, put sellers into the market, stopped them out, put buyers into the market, and then they ultimately let it drop as soon as they have placed all their orders. You feel me? Same thing over here. I mean, they get some sellers into the market, then they stop them out, then there comes the first drop, and then they had to bring price back into that area where they have manipulated the price. And this is a very interesting thing, guys. If they have to manipulate the market in a certain direction to make sure they have enough liquidity to let the market drop, that manipulation where they have to, when they buy into their sell position, they buy first to get enough liquidity to sell, but when they buy, when they manipulate the market, they will still have some orders left around that manipulation. So the idea is that we wait for them to show us their cards. So we want to wait for that manipulation. We want to wait for that drop, so that for that first drop, so we know, all right, there's a manipulation, there was a liquidity grab. We want to wait for that, and then we want to let the market come back into that manipulation zone. And this is where we are looking for that sniper entries with crazy risk reward ratios, guys. And yeah, to understand that, we need to talk about order blocks and all that stuff, but I'm not going to dig deep into that topic right now. I just want to talk about my buys and my trades for the day. Took a couple of sell positions, took a couple of buy positions, and yeah, I've recorded that stuff. Let me quickly open one of this video. Alright, this was the first video I was talking to you guys, but I really didn't have my microphone on. I hope everything will work fine with this video. But anyways, let's talk about this trade, guys. So as you can see over here, like, this was that range, and I expected the market to make to visit the whole liquidity that is sitting over here. I mean, it was not taking the liquidity, but my idea was that this thing should drop. It should drop to catch a liquidity. That was my plan, so that's why I was selling the market. I took 1% risk, and now you can see how I managed to trade. So I let it run, look what happens, and as soon as it was around 1 to 1, I think I moved my stop to break even and got stopped out ultimately. I should have really banked like half of the position, because with this order block strategy, I nearly always get the first movement to the first hurdle really quick. Like, the market is most of the time moving in my favor, so it is really important to take like half of the position off the table on the first hurdle, and then let the rest run for higher targets and manage the position along the way. But the first profit taking is the most important, guys, and after that, take the risk off the table. So this is what I did. So we can fast forward it. We smashed the break even. So this was the moment where I was going break even, because it kind of moved slow, and then yeah, it started to showing some buying pressure, came back and ultimately stopped us out after that drop. Yeah, this would have been a great profit target, like first profit target, but I was not closing. As you can see in this area, if you have a big move like that, the last downward candle is an order block, and as you can see, the market reacts on that order block pretty aggressive. Like, it dips into that order block and moves away instantly, because if the market moves fast, we create kind of an imbalance. An imbalance situation is that the market is imbalanced, it's moving fast, and there are still orders left on the table that wants to get filled. Whenever you see an imbalanced situation, most of the time, sooner or later, it will get filled. Like, whenever the market is moving like crazy, especially in the forex market, whenever it moves like crazy, or if you can see a gap in the market or something like that, sooner or later it will get filled. Nearly every time. But we are going to dig deeper into that topic as well soon. So this was the first trade. Now let me check for the second trade. Okay, what we had over here. I think I was checking the 15-second chart. Yes, I was checking the 15-second chart. After I got stopped out, I was like, okay, it could be that this was just another little liquidity grab, because after this drop, the market came back into this zone over here, which was kind of an order block as well, but on a smaller time frame. It's not that significant, but I was thinking like it could really drop because we grabbed some liquidity over here, and I really thought that it will move to the liquidity to the downside. That's why I was stressing this sell so hard. But let's fast forward this thing. I think I took some profits off the table and moved my stop to break even. Yeah, I moved my stop to break even and ultimately got stopped out later on. That's alright. It was a great trade. Let's see what else we have. Trade number 3 a little bit later on. It's the 1 minute chart. So this was the 15-second trade that got stopped out. Market was moving up again, and then we had that high over here. Structure break, guys. Structure break. Another push to the downside, and then I was just measuring that move, and I was looking to get kind of a reaction inside of this order block. Like we had this manipulation over here. Price came back into that zone a little bit, touched it 1 time, 2 times, 3 times, then came back, and I wanted to get in around in this area, maybe see another liquidity grab above the high before it drops again, because I was still thinking that it will hunt the liquidity on the bottom. I think this was a losing trade. I was just getting stopped out, as you can see. So this one didn't work out. We still have the buyers, we still have more buying pressure. It don't want to move to the downside. And then we had trade 4 and 5, and I think on that video, when I was recording that video, even my laptop was dying, so I was not even able to record that video. Yeah, I think it was like a 2-hour video, and my laptop was crashing, and then everything was deleted. But anyways, this is trade number 5. Trade number 4 was a quick sell position. What I did, guys, I was just looking the price action, guys, and we had that move up, break of structure. It came back into that order block, and this was where I was getting in, guys. This was where I was getting in. I was selling this thing, and it came down, and I think I collapsed the whole trade around in that 62% retracement level. I mean, we had this impulsive move to the upside, and all I was waiting for was for the market to come back into the zone to get a nice entry in confluence with an order block sitting over here with my stop loss somewhere below this, and I was trying to get the sell into that zone to then ultimately buy, and this is what I did. I was selling, and then I was collapsing the whole position by mistake. I just wanted to bank half of my position and trying to let the rest run for the lower liquidity that I still thought that it will hit that liquidity on the bottom, but by mistake I closed both positions. Luckily, because the market exactly turned around in that area, and as soon as I saw that, I was getting in with a buy position and trying to ride this thing to the upside, guys. Look where we had our stop. Ultimately, the stop was over here. You see that? And then as soon as we were around the recent high, I was moving my stop to 0.25% from an initial 1% risk. And then I was checking price action I was watching it pretty closely because I didn't want the market to turn against me without taking at least a little bit of the profit. That's why it's so important to take profits on the first target, guys, because the market will turn around against you guys, and it did on that trade as well. I was checking the chart. You see that break of structure? This was when I was getting nervous, but whenever you get a structure break like this, it always comes back into that area, as you can see right now. I will not fast forward it, you can just look at it. Most of the times, if you get a nice structure break like this, it comes back into that order block sitting over here that caused that drop. And I was closely watching the chart because I didn't want it to close here. I wanted to get it somewhere in this area to close out of the position. And then slowly the market started to move back up. Okay, now it starts to move to the upside, and I had my finger on the trigger because it could have been a quick liquidity grab to then push through the roof, but in that case I was really waiting for the close of that candle. I wanted to see that it moves straight, and if it stops, that's a sign that it wants to turn around. And I was instantly pushing the trigger, closing half of the position. Wait, yeah, I think that was the moment when I was getting out, because I saw that it's not one to push through the roof. And after I closed the position, I was moving my stop to break even and let the rest run. But later on the market stopped me out on that trade as well. I was not able to make a nice run today. I still finished the day with around 0.7% profit, which is fantastic. Took great trades. I'm still working on that strategy. Still, for me, it's the way to trade this way, still new for me, but I really like the fact that understanding the market structure and how the market makers move the market and what they're trying to achieve, understanding what they're really doing, it's a very interesting way to trade, and it is a really it is much more accurate, you know. Like, the entries that I catch now with this type of entry strategy, entry system, and the trade management gives me much more confidence in my trading, because I nearly every time see a reaction. I mean, you have to really be patient to wait for the market makers to show you their cards before you make that move. You want to see kind of a manipulation, and you want to see the first drop before they come back, and then you try to get the nice sniper entry. You really have to be patient, but the risk to reward on the other side and the accuracy, at least to the first hurdle. I mean, the first hurdle can be at around 1-to-1 risk reward. Like, the first obstacle on the way, on the 1 minute, 5 minute time frame, I mean, structure wise or order block wise, you see that on the chart. The first hurdle has to be the first profit taken, and after that, move that stop to break even. This is what I've learned as well, guys. It is so important to take the risk as soon as possible off the table and bank profit. Take partials, pay yourself, move the risk, take the risk off the table, and don't always aim for the big run, you know. Don't always aim for that big move, because these big gigantic moves, they will come, but you don't know when they come. You cannot always aim for that. That's the lesson that I've learned the last couple of years, guys. Believe me that. As if you only aim for that big ass move, you will get just slapped in your face all the time, guys. It really makes you feel uncomfortable with your trading because you're always trying to reach your ultimate target and you forget to pay yourself on the way to the target, on the hurdles that are on the way. You can see them, you feel me? It's very important, guys. If you take something away from this video, is take profits and move stops to break even on the first hurdle, guys. That's it for today. I'm back 3 weeks without any sign from me. Thank you for watching. Smash that like button if you think this video was helpful. I will keep you updated about my trading results, trading journey the next couple of days. Talk about my entries, trade management and stuff. Make sure to make you guys grow. And yeah, if you want to get in touch with me, check the links in the description. If you want to learn, if you need a structured course, check out the Genius Trading Masterclass course. Become a part of our community. We are a couple of traders. We have a big group chat where everybody's connected to each other and help each other out. And yeah, let's get it, guys. Have a great day. Have a great trading week. And let's make this year an unforgettable, profitable trading year, guys. Peace out, love, and harmony. See you later, guys. Peace. What you know, every time my body in